is Alex with MasterChartsTrading.com, and this is market recap for Friday, January 24th, 2020. As always, please hit the like button, subscribe to this channel. We're almost 1,000 subscribers. Please hit the subscribe button, and of course, share this video with others. Stocks are showing signs of fatigue. We'll see if the recent events with the Wuhan coronavirus could be just simply an excuse to sell stocks. We'll look at the junk bonds and see if they're given any kind of clues about the future of stocks. And treasuries are moving higher, and I'll show you why I think this could be a risk-off environment. Yield curve is beginning to invert once again, and this is important. I'll show a couple of trade examples, one for American Express, one for Costco, both with very nice gains. Another segment, I'll talk about trader education and trying to identify a bearish candlestick on price chart of oil. Dollar is still indecisive, and as a result, gold is somewhat still indecisive as well, while Bitcoin has run into resistance. Okay, so let's look at our proxy for the market, the S&P 500. So S&P 500, let me zoom in a little bit here. So first of all, S&P 500 is at very close to records. Actually, maybe it even hit the record a couple of days ago. Today's candlestick versus yesterday's candlestick. So it's a small bearish engulfing. You can see that today's candlestick engulfed the previous real body of the previous candlestick. How important it is in the context of a current bull market? It's I don't know. I mean, there was some bearish engulfings before as well. So, for example, here on 24th of September, and the pullback was just very little. Will we see something of similar nature right now? It's possible, but it's always difficult to predict the future, obviously. So I try not to do that, and I just try to trade the chart in front of me. On this chart, you can see four horizontal lines. You can see green, blue, red, and yellow lines, and these are my proprietary indicators for MasterChartsTrading.com. You can have them on your chart. Simply go to TradingView.com and then simply go to MasterChartsTrading.com, sign up for one of my services that includes the indicators, and I will open the door for you on TradingView. If you have any questions, you can send me a note as well. So anyways, possibly bearish engulfing. You can kind of see the similar picture here on IWM, the small caps, kind of bearish engulfing candle. I am reading the news that perhaps it's the Wuhan coronavirus that is spreading throughout the world, which is quite dangerous, what I understand. And this is what is causing for people to sell shares, to sell stocks. But, it's just a few weeks ago we had possible fears of World War III as the United States and Iran exchanged live fire, basically, and nothing really happened. We got a new record highs. So is this the charm? Is this time the charm? Guess there's only one way to find out. For me, it makes really no difference because anyways, I'm not going to be buying up here. You can see that, for example, this chart, this is Dow Jones. We actually bought here back on the 28th of May, 2019. So this is close to a year worth of trade. And I have no problem holding for this long. And, up here, I'm not going to be buying. I need to see a pullback. And the pullback, as I like to see, is usually towards the blue line. So again, these are kind of like support resistance lines, I guess is the best way to describe them. They work really well. I'm having, uh, just great. I'm using my own indicators and I'm making money. So, and my subscribers are also doing the same thing. They're using my indicators to make money and just ignore pretty much all the news. Okay, so QQQ actually made a record today. So of all the current price charts, QQQ, I mean, this could be the bearish engulfing. You can see that it hit the records and then sold off today. But, in the context of this huge move, how much credence should we give to just one candlestick? I wouldn't, just give everything to one candlestick. I would wait for a significant pullback still. This trade, for example, QQQ, we opened again back in June of last year, and it's just had a huge run, over 30%, exactly 30% run. And you can see that I wouldn't be selling it yet because my stop would be at the blue line. I mean, maybe I would have taken some profits, but you know, I would still hold this particular position open because my trailing stop would be at the blue line. So, is there a reason to panic? Mm, I don't think so yet. So I would just potentially maybe sell a little bit if you really wanted to lock in some gains, but overall, I don't think it's still a reason to panic. Just one candlestick. Junk bonds, so they pulled back a little bit earlier. You can see the pullback began on 17th of January versus S&P 500, where the pullback actually started 22nd of January. You can see an all-time high there. So perhaps junk bonds are, feeling the pressure. And as I keep saying, junk bonds and stocks correlate highly to one another. Additionally, you can see how close the lines have become here. This is support resistance lines again. You can see that very tight trading range right now versus wide trading range just a few months ago. So right this instant, the chances of a trend change are higher than a few months ago. So, if the price continues lower and continues lower to like 105 currently, uh, then we will entertain the possibility of a general bear market beginning for junk bonds and as a result for stocks again because junk bonds and stocks have very high correlation to one another. So we're looking to junk bonds for clues about the fate of the stock market. For now, it's not that bad, but there is indeed something to worry about on this chart, once again, because of the narrow trading range. TLT Treasuries, on the other hand, actually gained. So this is a long treasuries, long dated treasuries. These are actual alerts again. So uh, I don't normally show the actual alerts during my general YouTube video, but today I'm gonna go ahead and show this one because it kind of looks like a um, shift in sentiment. So perhaps the investors are shifting some of their money into treasuries away from stocks, and this is showing. Um, this is shown by the price of treasuries moving higher. So the more money is poured into treasuries, the higher the prices would go. So this is a classical kind of risk-off um, situation, whereas S&P 500 is moving lower, treasuries, especially the long-dated ones, are moving higher. But it's not just the long-dated treasuries; all treasuries and all uh, investment-grade bonds are actually also moving higher. So let me show you the uh, yield curve. So yield curve, you can find it on StockCharts.com, and there it is, dynamic yield curve. So what does this mean? So yield curve on this chart where I'm hovering right now, you can see that this is a 3-month yield, and the next one over is a 2-year yield, the next one is 5-year, next one is 7-year, etc. So you can see right now the 3 months yield is actually slightly above the 2-year yield. So this is the beginning of the inversion of the yield curve. And as I keep pointing out, previous examples of inversion of a yield curve, as in, for example, back in 2006, 2007, you can see a inversion of the yield curve. In other words, the short-term interest rates were above the long-term interest rates. It's not a normal relationship. Right now, we still have more or less a normal relationship, but it looks like we're beginning to invert. Will this turn into something even worse than it's right now? Anything is possible, and we should always be ready for a bear market in any security, including stocks. Here's that reason why the short-term yields are moving higher is BSV is also, you can see that breaking out as well. So all bonds are moving higher, and this is making the yield curve more and more inverted here. So for now, it's still normal, but let's wait and see what happens. We're still trading treasuries on the upside, as I just showed. We'll continue doing that for now. Okay, so a couple of trade examples. Here's one for American Express. So again, this is all I do. I look for a security that is trading above the blue line or is breaking out above the blue line. So in this case, we had a security which was already trading above the blue line here back in September of last year. It pulled back and then closed above the blue line. This is all I need to know. This is my target, this is my trigger. So we actually went ahead and I sent an alert to my subscribers right there on the 7th of October of last year. Today, American Express hit a new record. You can see a 20% gain. Very nice move. And again, I would be probably trailing it at the blue line still. Costco, same thing. In general, you can trade pretty much any security using my indicators. Uh, Costco alert was sent back here on 8th of March of 2019, good for close to 40% gain. Beautiful move. Again, I would probably still keep it open because my stop would be at the blue line, and you can see that there were the blue line was not even touched for a very long time. Again, if you need to find out more about the lines on this chart, talk to me at MasterChartsTrading.com. So this is the type of alerts, type of trades that we do here at MasterCharts Trading, and you know, I'm very happy about this particular alert. Okay, so let's look at oil, and this kind of like a trader education sort of thing. So let's spot a very bearish candle, and it is pretty obvious. It is right there on the 8th of January of this year. So why is this a bearish candlestick? So we opened where I'm hovering right now at around $62.80. Throughout the day, the bulls pushed the prices higher to actually, I think, new highs here for the move. But then something happened and the bears came in and just started selling like there is no tomorrow. And finally, the price closed way back down. By the end of the session, it was right next to the close. So this is a very bearish candlestick because not only it shows the signs of rejection, you can see rejection at the top, but also it has the signs of downward pressure, bears pressuring the price lower. So you can see the uh, afterwards the price continued lower. Uh, for me, the trigger to short, this is a purple arrow, so I did not send an actual alert, but this would have been uh, already a trigger right there on the 23rd of January. I would have been shorting it right there. I'm not sure exactly what happened, but I just probably missed this particular trade. So overall, bearish candlestick followed by a follow through to the downside. And now not only we had a bearish candlestick, we also have now an entry into a bear market for oil. So from now on, from the 23rd of January 2020, I'm thinking in terms of bear market. And I don't want to be buying this. I want to be selling it. I want to be shorting it. Because this is just the essence of trend trading. We want to jump on a trend rather, and just keep our position open for as long as the trend continues. Here on the 7th of November, I actually went ahead and I opened a long position, and it was a very nice run, but I went ahead and I closed it at a profit. So this is the way I think about stocks and the way I think about trend trading. Right, let's switch gears. This is dollar index DXY. Kind of indecisive chart, just all over the place. I thought here on 12th of December that this is it and we're going to continue lower. It's not happening. Now we're kind of going back and forth here, and we're literally in between bullish levels, which are at 98.19, and bearish levels at 97.20. So it's possible dollar will continue higher. If that's the case, then gold will come under pressure, very, very likely. Here's an example of how I think about trading again. Here's euro versus US dollar. And again, downward facing arrows here. These are purple in color. It means I did not send an actual alert, but you can see that they were all successful. Very easy to trade. You can see that very nice gains if you open simply by after close below the red line. For Forex, we can go both ways, bullish way and bearish. So in this case, bearish, we want to short this pair and just enjoy the ride, basically. So as a result of this, gold is somewhat indecisive. Here's that candle on 8th of January, that same 8th of January that oil experienced a big bearish candle. Here's another bearish candle. This is a shooting star candlestick. There's not really been a follow through. So it's kind of indecisive still, but I would personally not want to be opening too many gold positions right now. I'm just kind of staying on the sidelines for gold. Perhaps it's already worked off. Perhaps this, overbought conditions are already worked off. Perhaps not. We'll see. Uh, yeah, I want to just kind of stay out of gold market right this instant, basically. But we'll look for clues, and you sometimes just dollar surprises. Sometimes the securities just surprise you, and I keep thinking the dollar is going to continue lower, and it doesn't. Go figure. All right, finally, Bitcoin. You can see another purple arrow, downward facing arrow. Pretty straightforward, same thing. You can see a bearish security. It came up from below the red line, touched the red line, and sold off. So this is a kind of setups I look for when we're shorting uh, securities. Okay, that's it for today's recap. If you have any questions, please head over to MasterCharts Trading, click on Help, and contact me. Also, of course, head over there and sign up for one of the services. I have alerts, which are basically a newsletter, trading indicators, which you just saw. These are the trading indicators. Um, you can see very nice gains, for example, with Costco here. And all I did is simply look for a breakout above the blue line. And of course, the best deal is to sign up for both alerts and indicators, because not only you get access to trading indicators, you also get lots of examples for various securities that we trade. Small caps, large caps, ETFs, speculative stocks, gold related, etc., forex, etc. So you can sign up. Right this instance, still on sale at 38.33 per month if you buy a yearly subscription, and of course you can sign up at a monthly rate as well. That's it for today's recap. If you have any questions, please send them in. Thanks for watching and have another great trading week. Bye bye.